I'm Jamie Pratt, CEO of Pratt EDU, and we believe that CPAs need to be both good technicians, preparers of financial statements, as well as good decision makers, users of financial statements. The statement of cash flows, the subject of this course, offers a great opportunity to learn something about both skills. The course is divided into two sections. In the first section, we prepare a statement of cash flows from two balance sheets and one income statement. That is a technical exercise. It requires a good understanding of the way in which the financial statements fit together. But once you've got that understanding down and understand the numbers, we move into the second section of the course, the analysis of the statement. And in that section, we take a look at what cash flow analysis is all about in general, and then we identify specific cash flow profiles and take the whole framework and apply it to some very well-known companies in the real world today. Some of these companies are doing pretty well, others not so much. So I'm going to say goodbye to you now. I'll check back periodically just to see how you're doing. And we're going to start you out with a little poetry. You're probably familiar with Edgar Allan Poe's famous poem, The Raven. Something about a midnight dreary, while pondering weak and weary over forgotten lore. I heard rapping, something gently tapping on my chamber door. Pretty spooky, huh? Well, a fella named Herman Bailey took that poem a step farther and rephrased it a bit as a warning about the importance of cash flow. And it goes something like this. Though my bottom line is black, profitable that is, I am flat upon my back. My cash flows out and customers pay slow. The growth of my receivables is almost unbelievable. The result is certain unremitting woe. And I hear the banker utter an ominous low mutter, watch cash flow, watch cash flow. I'm afraid that too can be kind of spooky. Watch cash flow, the theme of this course. In fact, we will do much more than simply watch it. We will seek to understand it by understanding how to prepare, read, and analyze the statement of cash flow. In many circles, cash flow seems to have taken a back seat to profit when analyzing the financial performance and position of companies. And while profit is certainly important, it can only be sustained if the profitable company can create a cash flow that covers its debt obligations and tucks a little bit more away for those untimely periods when business turns sour. Think pandemic. The business landscape is sadly littered with profitable firms that went belly up because they couldn't create the necessary cash flow. It is also a fact the statement of cash flow is not well understood, especially the operating section, when it has been prepared using the indirect format, where net income is reconciled with net cash flow from operating activities. And it so happens that this format is followed by the overwhelming majority of companies across the globe. And another fun fact is that many CPAs, yes, CPAs, struggle when it comes to really understanding the statement of cash flows. So what do we intend to do in this course? At the completion of this course, you should be able to prepare a statement of cash flow under both the direct and indirect formats from two balance sheets and an income statement. Identify the key elements of cash flow analysis and how they relate to each other. Identify various cash flow profiles and describe what they mean concerning the firm's cash management behavior. And finally, read and thoroughly analyze the statements of cash flow published by well-known companies from various industries in different stages of development. Hi again. Well, I guess now you know where we're headed. you've seen the learning objectives. Get ready now to roll up your sleeves, because we're going to solve a technical case. I call it the Wildcat case. And I call it that because I created it a few years back when I taught in the MBA program at Northwestern University, the home of the Wildcats. We begin by preparing the statement of cash flows, both direct and indirect formats, from 2 balance sheets and 1 income statement. This strictly is a mechanical exercise, an adventure in puzzle solving. If you were given 3 pieces of a puzzle, can you figure the 4th? And solving this puzzle relies and drills you on your understanding of the relationships among the statements, how they articulate in the sense that most transactions immediately affect more than one financial statement. Solving these puzzles will not only enhance your understanding of the financial statements, it will also help you develop a new financial statement analysis skill called T-account analysis, which allows you to infer from disclosed information potentially useful information that is not disclosed. Let's get right to it. Consider these 2 balance sheets and the income statement for Wildcat Industries, covering the period from the end of 2021 to the end of 2022. Here are the balance sheets for 2021 and 22, and the related 2022 income statement. Also included is an excerpt from the footnotes containing selected information we will use to complete the exercise. And finally, our task: prepare a statement of cash flows for 2022 from this information. Interestingly, the technique we use to complete this task is fundamentally the same as that used by most companies to prepare the statement of cash flows. Before we dive into this exercise, let's take a minute to describe the big picture of how we plan to proceed. Here's a depiction of the statements involved. The 2 balance sheets describing Wildcat's financial position as of the beginning and end of 2022. The income statement, which describes Wildcat's performance during 2022. The statement of cash flows, which describes the change in Wildcat's cash balance from the beginning to the end of 2022. We can see that the cash balance fell by $3,000 during 2022, from $7,000 to $4,000, which explains the change in cash during the period minus $3,000. But we do not know the dollar amounts for net cash from operating activities, net cash from investing activities, and net cash from financing activities. So here's the gist of how we intend to infer these dollar amounts. We will derive the cash flow from financing activities by analyzing the changes in the balance sheet accounts that relate to the financing transactions: dividends payable, long-term debt, and common stock. The amount of net cash from investing activities can be determined by analyzing the changes in the non-current asset accounts, in this case property, plant, and equipment, and accumulated depreciation. And finally, net cash from operating activities can be derived by analyzing the relationships between the accounts on the income statement and changes in the current balance sheet accounts, with the notable exception of dividends payable, a financing account. Note, importantly, that the income statement is a measure of operating performance based on accrual accounting, which attempts to measure the amount of wealth created by management during 2022, while net cash from operating activities is also a measure of operating performance, but this one is expressed in terms of cash, not wealth creation, but cash creation. Skillfully managing both wealth creation and cash creation is necessary for operating success. Let's now get a little more specific. How exactly will we derive the dollar values for net cash from operating, investing, and financing activities from the other statements?